Good morning, traders. Obviously, we are getting a hefty sell-off here this morning, and I want to share a trade concept with you. Now, this is educational purposes only. I want to be very clear on this. This is a trade that I personally do. In fact, I've got an order out for one right now. But I've been trading these for many, many years, and I'm comfortable with it. And this has to be a large-sized trade in order to have the proper ratio to it. So let me walk you through this and explain this to you. So I'm looking at a butterfly trade, which butterfly is my favorite trade personally. I'm going to do this as an iron butterfly. And so that means that I'm selling a put spread here. And normally I do 50-point wide. I'm making this wider. I'm making this 100-point wings just because our market has been a little bit crazy and wild, to say the least. And you'll notice that when I put this trade on, and I'm doing this in a 20 lot size, so that's 20 SPX butterflies. So this trade has a maximum risk in it of around $17,000. Now, you can see my T0 line here. Let me put on my drawing tools real quickly here. So we can see the T0 line. And that T0 line is kind of mounted up here, and then it drops down here. So that's typical butterfly, okay? This butterfly is going to be slightly negative delta when I use the butterfly by itself. That means this is going to make money if our market goes down further. But, little caveat here, if I take a look at SPX, in my weekend update, you'll know I mentioned that if we broke this 5,500 line, I was expecting the next line in the sand to be there at around 5,400. So right now, I'm not thinking we're probably going to go below the 5,400. That's a personal guesstimation of mine for the foreseeable future. And I'm building this trade around that concept. So if I come back and take a look at this trade, you can see that I've done everything I can to try to make sure that if we come down to that 5,400 point, this trade is going to be doing fine. If we come all the way down here to 5,200, this trade is going to be doing fine. But I need to protect against that aggressive bounce that many times will happen in a sell-off like this. So how do I do that? How do I protect against this part up here? Well, I come in and I buy a call. I buy one call, and that's the ratio part of this. Basically, what I want to do is I'm looking to flatten these deltas. So I went and I modeled this a little bit before the call so that I didn't have to go through this whole process here. But if I include this, we can see that essentially flattens my delta here. It still gives me decent downside protection. Now, I'm not going to be profitable if the market goes down to 5,200, but I won't have much in the way of loss either. If we do, in fact, get that rip up move over the next week or so, this long call is going to appreciate significantly in value, and it's going to hold me up over here. Now, as we go forward in time, this will decay, so I will have to think about, before I get too close to expiration, I'm going to have to dump that long call that I have up here somewhere so that I don't end up in this valley of death. So this is not a trade I'm looking to carry toward expiration or into expiration, but after a couple weeks, if the market stays in this general area, I could have some nice profit in this trade. But again, this trade needs to be a ratioed sort of trade. I need to figure out how many butterflies allow me to buy one call, and this one call needs to be in a general area that might make sense, that will gain value if the market does in fact go up. If I only did one SPX butterfly, and that would mean that my deltas would be much, much smaller, and I'd have to go way, way up there. I'd have to go to 7,000 to buy a call to flatten this, but that 7,000 is not going to gain in value hardly anything if the market starts to rip up a little bit. So I have to have a call that's going to be close enough to maybe be impacted favorably in an up price move. So I know that's a little more of a detailed trade concept for you, but the reason I like this trade is butterflies get a great risk reward ratio when volatility is higher. That's the reason I'm looking at the butterfly here to begin with. And I also like the concept of having that upside protection, because when you have a big move like this, more often than not, the follow-up move, while it could still be down, and I feel I'm covered for some more down move, more often than not, the following move after a few days is what they call a dead cat bounce or a rip up. And that's why I need to have this guy in place up here in case that happens. So that's it for now. Just wanted to share this conceptual trade. It is a larger trade for sure. It's not something I want anyone to consider doing live. Certainly do it in paper and see what that brings to the table. Take care, everyone.